Welcome to Navigation Trading Live. You are now part of a growing group of do-it-yourself traders who are trying to change the way investors think about building wealth. But because we don't believe in using financial advisors, stock tips, or traditional financial media, we have to do things different. We have to do things smarter. We do that through an art and a science we call trade hacking. At Navigation Trading, our methodology is based on statistics and probabilities, not hype or emotion. Our core strategies have been used by market makers, hedge funds, and floor traders for many years. Now, we share these secrets with you. Whether your goal is to make an extra $1,000 per month or replace your current income, with our guidance, you can achieve financial success beyond your wildest dreams. So, let's get started. What's up, Navigation Traders? Monday morning, May 7th. Hope everybody had a great weekend. Welcome to Navigation Trading Live, where we broadcast every Monday morning a few minutes before the markets open. We do this on our Facebook page as well as our YouTube channel. So if you haven't connected already, make sure you do so. We also post a lot on Twitter, and so make sure you follow us there. This is where we make a lot of big announcements. We've got a bunch of cool stuff coming your way, just adding more value to you to help you become more successful traders. And that's what this is about as well. So if you have any questions or topics that you want us to cover, just drop us an email at info@navigationtrading.com, or you can post here on YouTube or Facebook and let us know. But for now, let's just go directly to the platform and see what's going on this morning. I want to give a little bit of insight and thought process into what we're thinking. If we look at we've got a few minutes before the bell opens, but if we look at the S&P 500, for example, it's up about $8 this morning. I drew a trend line here, not because we really use trend lines to trade much, but we had a big reaction to the downside off the trend line when it hit it last time. And so we are now back up to that trend line. And so it'll be interesting to see whether we push higher. And if we get a couple closes above the trend line, I would look at that as a more bullish stance with the market. And then we could continue to push higher. Or if it bounces off as it did here, look for potentially new lows, break the lows of February. That's kind of what we're hoping for, obviously, as volatility traders. If the market starts going down, that's going to push implied volatility up, give us more opportunity. We also do like to keep a short bias to the downside in our portfolio, so that would definitely bode well for us. But if it does push higher, we'll make the necessary tweaks and adjustments and continue to manage those trades just like we always do. So be watching that on the S&P. NASDAQ is the strongest of the markets this morning, of the indices relative. You can see it's up about 0.44% versus about 0.3 for the others. And so NASDAQ is, don't have a definitive trend line like you do in the S&P, but it's a little bit stronger relative. You see the Dow and the Russell. Oil's continued its strength, broke above $70 now. It's up at $70.35 at this point. You can see implied volatility popping up a little bit higher as we see that. We see the VIX is just up flat. With the market up, it's not going to be moving too much unless it's going down. Gold relatively flat. We can see that it's had a little bit of a slide the last couple weeks to the downside. Silver down a little bit. Bonds, notes pretty flat. Nat gas up over 1.5%. The grains pretty weak this morning. Soybeans down 0.65. Wheat down 1 3/4, and corn down about 0.75%. Bitcoin down a little bit. We don't trade Bitcoin here on the platform, but just always like to take a look at where it's trading. Has come back significantly from the little dip it saw earlier. But that was the opening bell. So let's see what's going on in the rest of the market. If we look at some of these other ETFs
XLU Utilities, pretty flat. XLV Healthcare, pretty flat. XLK Technology up a little bit. Biotech's up about 0.5%. XOP, an oil-related ETF, and some of these other energy-related ETFs, all up with the price of oil up. FXI, the Chinese large cap, having a little bit of downside, down about 0.62. Real estate up about 0.25%. Retail up about 0.25%. Some of these emerging market ETFs down. So you got Brazil, Mexico, emerging markets, EEM, all down. FXD, which is the euro, continues to see some downside there. Nat gas, I mentioned, GLD, and then the other indices that we already talked about. So what I want to do here today is to put on one of my favorite trading vehicles is oil, and that's /CL. So let's go back to that, and as you can see, we've had two really good plays over the last couple months in oil. When implied volatility, when our indicator popped its head above 50, we sold premium, and it contracted nicely, and we booked a profit. Popped its head up, sold premium, contracted nicely, booked a profit. Now it's back around that 50 level, 50, and the IV rank is 52. So definitely a candidate for selling premium at this point. The options are a little bit expensive relative to where they've been over the last year. So what I like to do here in oil is I want to look at a short strangle, so we're just going back to the well of what we'd continue to book profit on. If we look at the strikes on the call side of somewhere between 16 and 20, I like to go up a little bit more, so maybe around the 20 which would be the 75.5 strikes. So if you sell, right click and sell strangle here. And by the way, we're looking at the options with 39 days to expiration, so right in that wheelhouse of between 30 and 60 days. If we look at the put side and staying with around the 20 delta here, you got the 65.5. Okay, so we're about 10 points wide on that strangle. 75.5 on the call, 65.5 on the put. If we analyze that baby, and you'll see we've got a max profit of $1,300, and that's just with one contract. So the oil product, it's a big symbol. Like I said, I mean, you're only trading one contract and looking at a max profit of $1,300. Now, the good thing about oil is the leverage. And this is one of the things I really like about it is not only is it extremely liquid to trade, but if we right click here, hit confirm and send, well, you'll see the buying power is less than $1,200, is $1,179. Yet your max profit is $1,300. So that, whenever I say I love trading oil because it gives you such a good bang for the buck, that's exactly what I'm talking about. Only putting up $1,200 of buying capital and having a max profit of $1,300. That is just an efficient use of capital. So anytime oil gets above that 50 level on our IV indicator, I love to have a position on. Now, if you don't have permission to trade futures yet, or you're trading in an IRA or something like that, you can also look at these energy-related ETFs. I mean, let's look at XOP, for example. You can see the implied volatility is not as high in XOP as it is in the actual oil futures. You can look at OIH, same kind of story. It's about the 2133. XLE. Now we're getting a little bit better. So you've got an IV percentile at 78. So that's an excellent IV percentile to be selling premium in. So if you didn't want to do it, if you didn't want to do the trade in CL, the oil futures, you could look to XLE, sell a strangle or an iron condor in XLE, or if you do have futures permission, I would opt for oil, and you can do either a strangle or an iron condor in oil. So that's what we're looking at for our trade of the week. I'm going to work this order. If I get filled, I will shoot that out to pro members. If you are not already a pro member, our membership is still closed to the public, but you can go to our website and click on the pro membership link, and you can sign up for the waiting list. So as we do have spots come available, we would let you know. Hope everybody has a great week of trading. Talk to you next week.